Good afternoon, ladies and gentlemen. Good afternoon. We're going to get this started now. So welcome to the second annual Global Powe Index Summit. My name is Klisman Murati and I'm the CEO of Pareto Economics. The reason we have this summit, and we run it every year, is to really invite a global audience of embassies, high commissions, businesses, corporations, and investors, or stakeholders in the world. And typically, when we bring these people together, they come because they want answers to very systemic, complex, and multi-layered problems. Each embassy, each high commission, each business, each investor, each law firm have their own sets of criteria when they go through making solutions to problems. But working in this field for myself for a while, I realized that when businesses come together to find solutions to problems, they really focus on thematics, meaning whatever the issue is of the day, they tend to focus on solving that particular issue. But what's very much less discussed is why these problems emerge in the first place. What are the macro things happening in the world that cause these changes in the world? And this last year has been a perfect example of mass change in the world, right? Some obvious and some particular to your own businesses that maybe does not get the airtime or the media time that it deserves. So today is a chance to answer one very systemic question that applies to everyone. And that is, how will the world be changed and challenged over the next 100 years? And the reason we have this arc of 100 years is because we realize that governments, as well as investors in the private sector, tend to think in short-term increments when making decisions on problems. You may be used to this yourselves. So for a government, it will be every 4 to 5 years, so every election cycle. And for investors, it's typically every quarter, if that, depending on what the issue is. But the short-term thinking really leaves a lot of gaps in your knowledge to be filled. Because the arc of change in today's world requires a much more longer-term thinking. And if you don't have this within your own organizations, then you'll be at the whims of risks that you cannot anticipate and cannot control. But in order to really think long-term, what I've personally come to realize is that if you don't use first principles in your thinking, then you'll always be at the whims of externalities that will come and go whenever they please, and you'll be victims to this. Now, first principles thinking is a topic that is usually mostly in the physics sphere, in the sciences, but applying it to world affairs is something which is probably more difficult to do. But I think we've cracked it as an organization. We've spent a long time using first principles thinking when making the index, and also finding out what the future trends in the world are going to be by using this. But what are the first principles of world affairs? That's something which hasn't really been debated or discussed as much in the world, especially as it relates to world affairs. So we've come up with a set of criteria of how to think in first principles when it comes time to understanding world affairs. And using this principle, we are really able to project the future trajectory of entire countries. It seems like a quite confident statement to make, but we've tested it, and it's something which I don't think anyone in this room has seen before. So I'm very happy and honored to showcase with this to you today. So the first part of our first principles matrix, I suppose you'd call it, is understanding what is the primary driver in world affairs. So it's our assertion that the nation state, or the country, or the sovereign state is the most powerful entity we've created as human beings. It supersedes international organizations, it supersedes corporations, and this can be proven. People, for example, are citizens of countries. Wars happen between countries, tariffs are placed by countries, and international organizations are created by countries to serve countries. So if we start at the starting point of understanding how countries develop, then we're in a much better position to forecast whatever it is in your own embassies, high commissions, or organizations. The second principle is this. What do they want? It's our assertion that sovereign states want power. That tends to be an obvious statement to make. But then the question becomes, what is power? How do you define power in this case? And if you look at the trajectory of human history, one may think that power is the ability for one country to force the other to do what it wants, at least in the sphere of nation building. That is, I think, a result of power, not power itself. Power, the way we define it, is this. It's the ability of a country or a nation state to secure their own interests. So it's the ability of a country to secure their own interests. Now, this isn't a binary expression. So it's not either they can or they can't, but it's more in a continuum. So some countries are more able, and some countries are less able to do this. And the ones who are more able tend to have the most impact in the world, and those who are less able, the least impact. So if you're a business trying to find out where the best investment opportunities are, where the risks are coming from, looking at the world through this prism is much more useful. But then that's fine as an academic practice. But if you want to actualize this and make this useful to your own organizations, how would you quantify this? Okay? And how does a country, in fact, secure their own interest? What do they have at their disposal to do so? This is where the third point comes in. So interests are secured by a country maximizing themselves on what we call their centers of power. So to make it more simple, each country, the way we define it, has 6 centers of power that they can use to secure their own interests. All countries have this from their birth until their change. So if you look at the Soviet Union, when that broke up and countries were re-established, each country automatically possessed 6 fundamental aspects which they can use to secure their own interests. So the first part of this essentially is understanding what these 6 centers of powers are and diving into them deeply and then quantifying them. So it's our assertion that a country essentially is made up of 6, including their active consumer market, their military balance, their technological leadership, their systemically important commodities, their financial strength, and their geostrategic positioning. By their nature, this is what a country has at their disposal in order to secure whatever interest the government at that time has. And the interests and the agendas are naturally set by the leadership. Understanding what they have at their disposal to secure this is what we measure. We quantify and we create into an index. So what we essentially have is each of these centers of power has a corresponding sub-index that we have created. So for the active consumer market center of power, we have an active consumer market sub-index. Technological leadership center of power, sub-index in correspondence. So essentially what we've created is 7 unique indices which measure aspects of a country's development, and then we homogenize this and we create a super index, which is the GPI. We've done this for 7 regions across the world, and we've broken the world up like this. So we can segment each region and how they're developing within themselves and how they relate to the rest of the world as well. This is useful and helpful to do this. So what essentially you have at the end of it is a cell matrix where you have the regions at the top and indices down the side, and you can essentially mix and match your understanding of a country's development across time. What we'll be focusing on today is the GPI all. Okay, so how the Global Powe Index has developed from last year to this year. These other cells essentially give you insights into, for example, if you care about North and Central America, through the lens of the Geostrategic Positioning Index, that cell NCA-GSP is essentially what you can use to look at that specific region through that specific lens. So you make it very customizable depending on what your concerns are, what your future plans are as a business, and who you would like to engage with if you're a country to see what the future of your partner will be in the next 20 years or so. So that's what we can do with this. We've done this for 194 countries. Last year we did it for 113, so 81 new countries have been added to this year's index. So a lot more. So we essentially rank the world. We split the world, as I mentioned, into 7 different regions, and the scale of the GPI is between 0 to 600. The scale for the sub-indices is 0 to 100, so we essentially add up all the scores and we present the GPI, balanced equally. Okay? Now, are you ready to see how the world ranks? That's what you're all here for. Now, what I should have probably done is had a competition with you guys to see if you can correctly guess the top 4. You could have a free consulting session or something with us, but we had no time. But many of you may have in your minds where the countries rank. But when you see this list, what I want you to realize and to see is how power is defined, right? So power in our definition is the ability of a country to secure their own interests. So that's what the GPI does. It tells you which countries are better placed to do this and which countries are not as well placed to do this. Okay, are we ready? So this is the top, 1 to 101. Everyone's eyes goes to the top 10 naturally, as it does. So we have the USA, then China, then France, then Singapore, then the UK, Canada, Germany, the Netherlands, Ireland, and Denmark in the top 10. Now these colors may seem confusing, so I'll explain what the colors are. So the yellow is essentially showing countries we ranked last year which haven't moved since last year. So have remained, stable. The colors in red, in green, shows how much higher they've moved, and the countries in red shows how down they've moved, and the countries in the blue are new entries to the index. So these are countries we haven't ranked last year, but we've ranked this year to see their movement. This is the bottom half of the index for you guys to see. Now, as you can notice, from the top to the bottom, the countries we've added new tend to accumulate towards the bottom half of the index. Countries at the top, you can see there's more volatility, I suppose, but this is the picture that's painted through the Global Powe Index, not through the sub-indices. The sub-indices are used to calculate the index in total. So there's things that we can extrapolate from this index that I think are very important for you guys to see today. So let's focus on the top 10, because everyone's eyes goes there, so let's see how the landscape has changed. Russia's position has changed significantly from last year. Russia in last year's index was second, now they dropped down to 11th, measuring the fundamentals through our analysis of Russia's positioning. Which is why only 4 out of the 5 countries in the P5 are represented in the top 10. Russia has now moved down to 11th. 60% of the countries in the top 10 are European countries. This isn't to say that Europe is the most powerful region, but it just goes to show that Europe is overrepresented in the top 10. Last year, that was Asia Pacific, right? I think it was 40%. We also have 70% of the countries, so 7 out of 10 are in the OECD. And what's changed significantly from last year is what regions are represented in the top 10 as well. Last year, 5 out of the 7 regions were in the top 10. At least one country was represented within the top 10. But this year, we've seen more concentration of power. So Europe, North America, and I think the Asia Pacific are the 3 regions which have representation in the top 10. Europe outweighing a lot of them. We also see this. The highest ranking newcomer is the Netherlands into the index, which is quite interesting. The lowest ranking newcomer is North Korea. So given the military risk that I suppose North Korea presents, if you look at the country holistically and see how able they are to secure their own interests, they're at the bottom of the list. And whatever interests they are, again, are dependent on the actual leadership themselves, and this changes through administration to administration. People pivot, but the ability to secure whatever interests you have as a country changes, and that's what we measure again. So we can't predict what the future ambitions will be of a country, because that is dependent on the leadership themselves. But what we can say is, what do they have at their disposal to actually meet their interests and accomplish their interests or their agendas? This is also something that I think I should share with you. What this shows essentially is the volatility within each region. So from last year to this year, which countries are the most volatile in terms of movements and which countries are the least volatile in how they move? Again, this only measures the countries we ranked last year to this year. So 81 countries are not in this. So we're measuring last year to this year, okay? So we can see within Europe, the countries which are the least volatile in terms of their change, France, Germany, and the UK. The most volatile countries in Europe include Bulgaria, Serbia, and Romania. And you can see by how much. So it's moved by plus or minus 1 ranking, whereas the bottom moves from 15 to 18 places. Down, right? So minus means down, so they moved down 18 places. And not many countries were included in Europe. I think maybe about 6 or 7 new countries were included in Europe. So this is a significant change. If you look at Sub-Saharan Africa now and see how they've moved and changed. The least volatile, Nigeria, Botswana, and South Africa, with a movement of 0 to 2 places up. And down we have Zimbabwe, the Central African Republic, and Mali, moving between 23 places and 35 places down, the most volatile. The Asia Pacific, right? China, Singapore, and Vietnam haven't moved at all. The biggest movers, Cambodia, Laos, and Papua New Guinea. Although it's the biggest mover, not so much. So the volatility is not as much as the rest, as you can see. We also have South America. We see Venezuela, Ecuador, Paraguay. Again, haven't moved too much at all, from 0 places to 1 place, up. Whereas the South American countries which have moved the most is between 3 and 2 places. 3 places down and 2 places up. So this volatility doesn't only necessarily mean down, they can move up as well, okay? So if they do move up, this can show potential for the country moving into the future. This can provide signals for you as businesses as to what are they doing, what's happening in this country, and where best can I place my resources to invest depending on what my agendas are as a business, or even as a country. If you're looking at what partnerships you want to make with countries into the future, and you want to have a diagnostics of where this country is today, and the trajectory, these can provide very good signals as to where this country is going into the future. We have MENA as well, very interesting to see. Lebanon, Morocco, and Oman haven't moved at all from last year. And I think MENA and South America are the only regions which I think we've included all the countries from last year to this year. So this is probably the most accurate view in terms of regions. MENA and Asia Pacific, in fact, as well. The biggest movers, Kuwait, Bahrain, and Turkey, between -9 to +7. So again, comparing that to other regions, let's say Europe, which has a movement of between 14 to 15, down, the movements between the MENA region countries, not so much. North and Central America here again. Top 3 countries haven't moved at all. Okay, America still remains the most powerful country in the world according to our index. Canada, again, from second to second in the region, by the way, right? So we're not looking at it across the world, comparing it to what we're seeing within the region, how much have they moved. And then Mexico as well. Cuba, Jamaica, and Nicaragua have moved from -17 to -3, so a big movement within the Central American countries. Finally, we have Central Asia. And this measures Russia, this measures the stans, essentially. Russia, Kazakhstan, and Georgia within the region haven't moved, okay? So although we know that Russia has moved from 2nd to 11th across the world, if you're looking at it regionally, it hasn't moved at all. Kyrgyzstan and Armenia have moved from +3 to -2. So again, significant, but compared to other regions, you can make your own mind up as to what the significance is for your own organizations, okay? So what does this tell us? This tells us that power from last year to this year is volatile. But this is due in part to the fact that we've included 81 new countries into the index. Now this has volatility in it, inbuilt, because there's more countries and countries move. But what we've noticed is that countries move mostly at the bottom end of the index. The top countries are more reliable as a figure, especially when we compare 2 different sets of amounts of countries. Next year when we do this, we're going to keep it at 194 and continue it at 194 going into the future. So some of this volatility is artificial because there's more countries, right? The measures have remained the same, but the countries have increased, obviously. So that's what we can see about this. So if you're an investor, if you're a business person of any caliber, or a representative of a country, and you're looking, what is the future of my country? Currently, the way that we do this, we look at very narrow measures. We don't take a holistic view. There's no measure that can actually articulate holistically where you are and where you want to get to, right? So the way I compare it is, let's say you want to run a marathon, and you bring us in to analyze what is your likelihood of winning this marathon. What we can't do is judge your passion, right? Your motivations to actually win. But what we can do is measure what you have at your disposal, what equipment you have, how good are your trainers, how close is the gym from your house, and have these very specific metrics to say, given what facilities you have around you, and let's say your passion is at 100%, you're 70% likely to win this race. So if you translate this to a country and you're looking at the future of your country or of any country you want to do business with in the future, you can see it through this prism. So through all of this, we've identified the following. And this is super, super important. When you're looking at trends in your own businesses or within your own organizations, and you want to forecast the future for yourself, we've identified 2 macro trend catalysts. Now, what is a macro trend catalyst? This is what causes the trends to occur. So the fundamental tectonic plates which allow changes to happen in the world. Okay? And from these 2 macro trend catalysts, you can essentially forecast where this country is going given the availability of resources, problems in their regions, and their ambitions. So the first one is essentially what we describe as the Great Convergence. So as countries grow and lose power across time in their senses of power, as we see, 4 specific themes emerge in the world that will impact you no matter who you are. Right? So whether you're a lawyer in London, whether you're a dentist in Tristan da Cunha, whether you're a representative from the Saudi embassy, right? You have the ability to see major changes happening in your industry and in your country. And this is how we've identified them. So the first one is globalization. It becomes more important because as countries grow or lose power in their COPs, they have a larger or smaller voice in international affairs. So a country back in the 20s who probably didn't have much, as they developed resources, for example, as their economies grew, as their technological leadership grew and developed, they now have a bigger voice to demand things, let's say at the WTO, in the international sphere. They become more valuable to other international partners. So globalization becomes more important, it becomes more interconnected. Or it can become challenged depending on who these leaders are and what they demand of themselves and what they demand of the partners that they want to work with and what power structures they want to challenge. Because now they have the ability to challenge this as they grow and develop. And it's the astuteness of the leadership itself to formulate its internal country policies to make sure they achieve their agenda. But globalization becomes a big factor of change. The second one, as we can see happening today, geopolitics becomes much more rife, much more volatile. Because the more of a voice you have in the world and the more of a threat you see developing in the world, you may want to hedge this by forming alliances with countries which changes the geopolitical picture in the world significantly. And in the past, when we had 2 major power blocks, the Soviet Union and the West, volatility wasn't as much. But now, as this has dissipated, countries are growing and developing their COPs and they're developing identities in terms of political identities which they want to grow into and they want to adopt. What they decide to do with whatever partners they want to decide to do it with becomes more volatile, which is why we see the institutions of BRICS playing a bigger role in the world today. Because countries who voluntarily ascribe themselves to this have agendas which are shared and they want to work together to achieve these. Right? It's no longer the G7 and that's it. We have a coalition of partners under different ideological banners that come together to challenge current power structures or to create something new for themselves. And the result is tension across the world, right? And we'll see more tension arise, is our affirmation, as time passes, as countries develop their COPs. So this is a quantitative measure of what we see in reality. So when you see all of these things happening around the world in terms of countries' ambitions and intentions, and you trade pacts and you defense pacts, they're doing it because now they're seeing it in themselves. They can back this up by not only talk, but by action. And we measure this action. The next thing that arises, transformative technology, happens at scale. Meaning no longer do we have the Silicon Valleys of the world dictating and developing products and services which scale. We have other parts of the world developing regional technology and uses for their own people. So that's something else that we see happening on scale across the world. So if you're an investor in this space and if you want to see which regions provide the best markets for my development, people are becoming much more wealthier across the world. Although the wealth gap is becoming wider, it's rising, though people are coming out of poverty, but at the same time people are becoming wealthier because that compounds. So the idea that the wealth gap is happening artificially, it's a natural thing which I believe develops as the wealth grows. Because you'll start to see more wealthier people across regions where wealth wasn't even considered in the past. And finally, we see this across the world, societal change in different ways. We have mass migration movements from parts of the world which aren't doing as well, which are measured by COPs, to parts of the world which are doing much better. So population movements across time are developing. Not only due to economic reasons, climate change has its part to play, but with that comes a new perspective from these people coming in, and we have companies and organizations developing a response to this. So think of ESG. ESG, back 20 years ago, wasn't talked as much. But now as people are becoming more educated, they're becoming more, they're demanding more from their businesses and they're demanding more from their governments, they are responding with more tailored solutions to these growing calls for different things. Now these are all happening at the same time. We call this the Global Four. All right? We define this as the Global Four, so no matter who you are in the world, no matter what business you're in or what country you represent, at least one of the G4 or Global Four will impact your business across time significantly. And what's happening more so is that these are converging together. So no longer are we having these in isolated places, but we have transformative technology mixing with geopolitics, creating military solutions, societal change, with, let's say, population migrations causing more tailored solutions to trade, or the lack of it, or more trade barriers arising because countries aren't happy with other countries that they previously did business with. So this is the first trend. So if you're looking at your own businesses and you're seeing what's changing, it stems from these four. Everything that's happening in your business life today or in your countries are stemming from these, what we call the G4. Second thing that's happening in the world. There's a lot of talk of multipolarity. Okay? Many people are saying that the world's becoming more multipolar and there's no longer the Western alliance which can dictate the terms and conditions of global trade, global commerce, or a political identity. But we tweak this a little bit and we call this segmented multipolarity. Segmented multipolarity is essentially the concept that we have these COPs. And as time passes, what we won't see is equal growth in these COPs for countries. No country grows equally across these six. Okay? So what starts to happen is that maybe some countries put more effort into one or two of these or a combination depending on what they have at their disposal. So for example, Japan doesn't have any natural resources, so their systemically important commodities aren't going to be as developed. But they're going to overcompensate by having the other five more strong. So if you're living one day and you go blind, your other senses become more powerful. So what this happens over time is that countries will develop, let's say, their geostrategic positioning more so, and they become a center of power onto themselves by having this as the front runner for their development. So if I now am a country and I notice that although my technological leadership isn't where it needs to be, what do I have at my disposal to secure my own interests? So we no longer have an equal multipolar world where countries will equally develop. We have countries which are more stronger in one area than the other, and they coalesce around other partners to make sure that as a collective, they have the ability to secure a collective interest. So this is what this measures. So this is what we're seeing happening. So when you hear calls where we say, for example, the BRICS, as I mentioned, are becoming more powerful, why are they becoming more powerful? They become more powerful not because they just find themselves that they want to work together, but they each have their own ability to use what's at their disposal and collectively, with other partners, come together to secure a common interest. And this is happening across time organically all the time. And any result of this would be what we see in the world today. So what we don't say, how is the world changing? Because every single one of you are experts in seeing how your world is changing. So that's not what's interesting or important. What's more important is why is it changing? Right? And the reason why, in short, the world is changing is because countries are developing their COPs at different rates, causing the changes and challenges in the world today. And we measure this. So if you want to plan for the long term in your organization or your government and you want to find out what the fundamentals are for a specific country into the future, this model helps you do this quantitatively, and it is devoid of any opinion or any bias that anyone may have because we measure the numbers. So I'll leave it there. Thank you so much. We're going to have a 5-minute break and then we're going to reconvene for Q&A. Thank you so much.